Good day, welcome to my YouTube channel. My name is Samuel Gochuko Michael. I'm a forex trader and a businessman, and this will be the first of plenty videos I will be posting on this channel. It's going to be covering a trade setup or the trade setups I took during this last week of trading, which ended yesterday, Friday, the 27th of October. So please forgive me for the extra background noises you'll be hearing. It's because I'm recording or making this video at a very busy hour of the day, being 9:22 a.m. Nigerian time, GMT +1 actually. So people are already moving about their days and trying to get down somewhere. But let's check on this trade which I took. I should be attaching the screenshots to the trades from MT4. But at first, what did I see that made me take my trade? So as you can see, I have done some markups on this chart. I first did my markup on the daily time frame to check where price is currently at and where price is tending towards. Of course, that with respect to what the dollar index is doing also. So my network is kind of fluctuating. I'm waiting for it to load. It's not coming on. Okay, network is back. So you can see the dollar index is trading upwards and the indices markets will move in opposite direction of the dollar index. The US 30, the Nasdaq, the XPS 500, they will move to the opposite direction where the dollar index is going. So since the dollar index is trending up, we can expect that the likes of Nasdaq will be trending downwards. Although this doesn't look clearly like a downward trend, looks more like a consolidation. But when you open US 30, you see it clearly that it's moving down. Let's check XPS 500. We can also see the same thing. So let's check the charts where I did my markup. Now, what was I seeing, or what did I see that made me take this trade? Let's see the 4 hour and see how the structure is. You can see that this is already going down from the 4 hour. So still on the daily, let's check. From where we just reacted off and price is falling, I saw a number of things which are marked on my charts, and these are the things that made me conclude or arrive at a trade decision. At first, this was a very strong candle, a bearish candle which took out these lows, and on taking out the low, it did not return back to the range and just give a wick. If you see wicks like this, it's going for either external or internal liquidity. Like this is an internal liquidity. You're seeing a fair value gap here for those of us who are ICT students who have been learning from one of the best in the industry, who decided to pour out himself from 2022 up till now. He has been teaching his concepts for free on his YouTube channel. You can go over there to learn from him. You can see that this is a gap, and price from one gap that you can see here traded into another gap. This is internal range liquidity, and boom, price came all the way down. On taking out this low, you can see a little retracement candle which gave another fair value gap here. So that gap was not traded to back. Price dropped and took out this point of liquidity. On taking out this point of liquidity, you could see that price started making an upward move again. That is after taking liquidity here. You can see how this grabbed or gravitated lower and then pushed up back again. That tells you it was a liquidity grab. After that, price moved away, tried to come back to take the liquidity here again, but left it open and started going up. So since after this candle here there was a strong push downwards, then we know that some orders were here, and that is why I marked this point. Now this is a fair value gap above this block here. So price returned back to this block and tapped into the fair value gap here, pushed down aggressively for liquidity below here. So you can see you need to have logic behind your trade. You need to have a reason for you to want to take a trade. Now back to the trade I took on the 24th, which is this. Let me go to the 15 minutes so we can see it. I had given commentary already. So this is a trade here on the 15 minutes time frame. You can see the trade. So what did I see that made me took this trade? If we check back again, on the daily we had a point of liquidity here, of which price had tapped, and after price tapped into that point, we expected an up move at least to another point of internal range liquidity. So this was the move I was trying to catch on this day, a move into this fair value gap, which you can see here. The fair value gap, which you can see here, the red line there is about 50% of that fair value gap. So ICT taught us that when you are targeting internal range liquidity, you put it in percentage. At first 25%, next 50%, next 75%, next 100%. So price can tap into any of these levels and just run away. So something we do if you want to take a trade, it's best you put it at the entrance of the fair value gap, and then you put your stop loss below the low of the fair value gap. Now on taking this trade, I've shown you what I saw. So on the 15 minutes, when you check your higher time frames for directional bias, you go to your lower time frames to get a nice trade entry. So how did this go? Yes, this was the point where the liquidity was taken. That is that daily sell side liquidity, which was marked red, I showed from the beginning, and price began to move upwards till it went out of this range, pushed into another block here, a daily order block. You can see it from here. This other block here. So price pushed into it, and yes, it should have some reactions, but I had my targets. So since it's another block, I was expecting that price would push through it. Since there's a fair value gap above it, tap into that fair value gap before any further drop, and that was a move I was interested in catching, which I did participate in, but not fully. I didn't hold to full TP, and I'll show you why. I could see another point of liquidity inside here, and I was like, if price taps here from my point of entry, if price taps here, that is already above 1-to-1, I'll take off some partials, and once it goes above and it tries to enter the fair value gap, I'll take out a little again. So you need to trade with a plan. You need to trade executing that plan. You don't just come to the market without a plan. You're going to get burnt. Now, what happened on this day? Price did tap into a fair value gap here on the 15 minutes. You can see it, and on tapping that, it rallied but did not take out this liquidity. So when it came, took this little high here, dropped into another fair value gap, I was expecting that price would go for this liquidity and then ultimately tap this point, but I took a rather early entry because I was somewhat impatient for price to come back here. I didn't want price to leave without me, so I took that entry, and you can see price returned back after my entry down to an obvious fair value gap, and took quite a while before taking out this point of liquidity, and then went above the other block a little and tried to tap into the fair value gap but did not do it. And like I said, I had my plan, taking out some portions, and after that price dropped aggressively. Now if I was still holding this trade, I would have been taken out completely because of where I did put my stop loss. So I had my plan in place and I was following my plan. However, price came down for the stop loss, took it out, and ultimately moved to the level I outlined, and even went further, almost reaching the 100% level, this past 50 and past 75% of this range of that fair value gap. So this is how we trade. You come into the market, you're seeing what you're seeing. You're seeing what the market is showing you, not what you are seeing. Let me rephrase that. You should be able to see what the market is showing you. You should be able to see the hand that the market is tipping to you. I want to go XYZ direction. You need to see it, and you need to align yourself to trade in that same direction, not trying to do something counter what the market is doing because you want to, or you want to make sure that the idea you had in your head comes to pass. No, the market will do what it wants to do regardless your effort in trying to make it go where it's not attempting to go. So we'll take a look at the other trade. I'm going to attach the screenshots to the trades I took, or better still, I'll just open my back end, the Forex Funder 100k free trial which I'm on, and you'll see the trades which I took there. Still on Nasdaq on the 26th, I took another trade, and trying to show you how the trade went, where it went to, how it performed, and all that. So this is me doing markup on a totally different chart, but still Nasdaq. And you can see these are points of liquidity that I have outlined. This is a fair value gap. This is a fair value gap. You can see DFVG, which is daily fair value gap. Price reacted off of this high and started making its drop. Kept dropping, reacted on this fair value gap, which was marked on this other chart here, and boom, dropped more. This is aggressive, and without pulling back, you know this is not a liquidity grab. This is a structural move. If it just tapped in like this and rejected, we'll call that a liquidity grab, either internal or external, but it's not a rejection. We're not seeing rejection per se, as it will be said on those who are doing full-time candlestick analysis. So price moved off of this region and did not come back with a rejection, so it was not a liquidity grab. Now what happened on the next day? Price opened with a gap. You can see the gap there. Price opened with a gap. Yes, there's a fair value gap below here that price wants to reach to, as was shown in the other place, but price opened with a gap, and this caught my interest because ICT himself would tell us that at least 70% of the times you see a gap, price comes back to fill that gap before returning. So we treat opening day gaps just like the fair value gaps and expect that price will return to that level to mitigate before continuing in the direction it wants to go. Now, since that caught my interest, you check the 4-hour, you can still see the gap clearly there, and you can see a fair value gap on the 4-hour just there. So nice, I went to my 15 minutes time frame, and I'm going to lower time frames to look for setup. Which setup can I get? Which setup can I get? I can see clearly that there's a fair value gap below. Remember this daily fair value gap that we outlined here? So I was eyeing that if price taps into it, at least we'll be able to see some reactions. Now price came off this gap and just kept shooting down till it tapped into this fair value gap, about 25% of it. So let's say this line is a 50%, so about 25% of it, price tapped into there. You can see this seemingly equal highs, and I was expecting that price would want to reach there, so at least take off some stops that will be resting there and ultimately tap into this region. And there you can see it, price tapped into 25% of this level and rallied up, leaving a fair value gap. To trade into somewhere in this region. I was also targeting about 50% of this region, and I took my entry without waiting for a return to this fair value gap. Price ranged a little and then came down back, tapped into the fair value gap that we can see on this 15 minutes time frame, and boom, moved straight to TP. So something I'm also trying to work on is my patience. This is a 15 minutes time frame, and imagine price just kept on moving. So this was not a day of low resistance liquidity run where the moment you take your trade, you have seen everything, you are seeing price begins to move. Price was not willing to move at that point, and I was not ready to stay for long, so I didn't hold this trade to full TP. But I took something out of it, and you can see the price just tapped beautifully into the new day opening gap, and after that it gave up the ghost, as ICT would say. Gave up the ghost and moved down to about 75% of this daily fair value gap, which we are seeing below. So like I said, price was going to reach for that earlier, and we marked 50%. It moved even down to 75%, and since it had tapped into that fair value gap, you would be looking for a trade in the opposite direction based on what the market is tipping to you, or the market is tipping to you. So this is how I traded this week. These are the two trades I took. Yes, for now I'm not fully trading all day, and I'm not going to be trading all day, because while starting out my journey around I think that was 2019, but fully in 2018, but fully in 2019 started. I'd been hearing about Forex around 2018, and I felt, whoa, how do you tell me you just sit in front of your phone screen or laptop screen, you push a button and you make money? So I didn't believe all that. Up till mid to late 2019, I started taking it serious, went for mentorship, and began trading. And after a while, I had to be going for higher knowledge, till I finally found ICT, who has really changed the game for me, who has made it simplified. I know that I don't have to sit all day trading. At the start of the journey, I would want to sit, try to catch every move, get my fingers burnt, get money blown, and all that. After that, I tried swing trading. I would want to hold the trade for long, maybe try to catch the entire daily range, as he would now say. I'll try to hold the trade. I want to do insane things, but following ICT, I have learned that you really don't make the money because you are able to hold trade for 955 days. Just a sense of humor. You hold trades based on logic, and your goal is to make the best trades. The money would come, but make sure that you are catching the best trades. Know your personality, know what you are able to stand, and follow it, and keep on pushing, keep on showing up at the market each day. Even if you will not trade each day, show up at the market. So one thing ICT has helped me learn, or something I've learned from him, is that trade when the market is moving. You can see I'm trading Nasdaq. I don't have much on my watch list. I just have 2 Nasdaq repeated, same Nasdaq, US 30, US 500, because we'll use that to check for smart money diversions. DXY, which is the dollar index, and Euro USD, GBP USD. But mainly I'm trading the Nasdaq. Use others as tools per se to confirm your directions and take your trades. You are not meant to spend all your day on the chart, because you would want to take every move you're seeing. Have a specific time where you trade. The markets open 8:30 New York local time. You should be on your chart by then. Before then, you should have checked what happened the previous day, where are your anticipation, what is the bias you're having, and once the market is opening, you should be in front of your system. Are you seeing trade setups? Are you seeing trade entry? If you're seeing, you take your trade. If you don't see, you walk out and you wait for the afternoon section. That is how ICT has taught us to trade. And I'm so grateful that I'm following this plan and I'm seeing results. AM session New York or PM session New York. And if you decide to trade the London session, good for you. So it means you have at least 4 opportunities each day to take a trade within the time windows. You have London AM, you have London PM, you have New York AM, you have New York PM. You can take your trade in any of those periods and start getting nice outcome. So this will be the end of the video. I hope you got value from it. I know it will be sounding strange to those who have not been following ICT, but for many of us who have been students of ICT from the 2022 YouTube model of mentorship, which he started, down to 2023, this will not be strange. The fair value gap, the new day opening gap, liquidity run, internal range, external range, this will not be strange to you. So make sure you are hitting up on this channel and going to grab some knowledge for yourself. In subsequent time, I'll begin to drop educational posts, as well as I'm dropping my trade reviews and the setups I took and why I took them. Thank you for watching till the end. Thank you for staying till this time. I'm grateful and hope to see you in the next video.